turnover in the fund's very low, but in the last 6 months we have initiated one new position, which was Starbucks, the American coffee chain. We added to that on the last 3 years. The stock price has been going sideways and it was trading at the cheapest valuation we've seen in many decades. That's principally around a worry that Chinese growth is going to slow, but the penetration into China that we've seen is still just the tip of the iceberg. We have a strong commitment to the long-term future of the middle class growth in China, and we think EPS growth can get back towards 15 or 20% per year as they improve customer experience, they improve technological advancements like app ordering and things like that, and they focus on the higher end and the premium products as well. We run quite a concentrated portfolio, and if I'm honest, we love all of our positions equally. We spend a lot of time focusing on portfolio construction and putting the individual components together, and believe that the actual performance of the portfolio as a whole far outweighs any individual component therein. So we do spend a lot of time on that, and my own PA holding is all in the Latitude Horizon Fund, so that would have to be my favourite holding. So for the last 10 years post the financial crisis, the US has been outperforming just about every year all other global markets. I think that might be set to change, that leadership might be set to change as valuations are looking increasingly stretched, margins are very high. Emerging markets offer some value, but they are very volatile and investing there directly can be very risky. So for me, Japan and the UK offer the best value. Japan is more geared to global growth and the UK market is a bit geared to the Brexit situation, but I think those two are where we've been focusing most of our ideas. Yeah, so the gold's been a great position for us. We invested through a tracker fund, gold bullion securities, and we have about 10% of the portfolio invested in this, and it worked very well for the last 6 months as equity markets rolled over. So we're very pleased with it. My personal belief is that gold works sometimes in the cycles, not always through cycles, but today we're in one of those stages. It's late stage for the US Federal Reserve's rate hiking cycle, and it's possible that we're going to have increased volatility, increased political uncertainty with a backdrop of increased inflation. I think it's a very good time to be considering gold for part of a portfolio.